Hi guys, this is Reddy from Wealthy Options. Welcome to another episode of 0DTE Pulse. Today is Nifty expiry. So we have a lot to discuss today. Especially from the premium behavior point of view. But before we get into that, just look at the underlying first. So Nifty today, it sort of opened with a gap up of around 55 points, and then it tried to continue to go up by another 35 points. From there it fell 100 points in the next next 10 minutes, right? So during this time, the straddle premium, the ATM straddle premium opened around, I think, 115. So kind of just 10 points overnight decay, and then during this first 15 minutes the rolling straddle premium was sort of okay, in the sense it's in spite of these two red candles, the premium was not shooting up. But however, so the straddles which are entered at 25,500 and some at 550 and all, some of the puts, especially the strategies with the small stop losses and relatively big stop losses for the puts and all, so they suffered with put stop losses. And then Nifty it gave a V shape in the next 15 minutes. So basically in the first half an hour, Nifty went down by 100 points and it completely recovered up to here. The premium behavior up to here, in the sense up to 945. So it was okay, in the sense that there was kind of Nifty fell and gave a V-shaped recovery. The premium was sort of cooling off, so it did not give a big pain, at least for my setups. So some of the strategies, both puts and also calls taken out, but some were able to escape from that V shape. So my MTM was sort of it was break even only. It did not go into the big loss. Initially it went into kind of slight 0.1% of loss, and then recovered it. It was break even. The actual the drama started from the time Nifty started pricing the risk of breaking out the day high. So this candle, from 950 onwards, so premium started going up, straddle premium going up. That's mainly because it was pricing a day high risk. So as the day high broken, so if you look at this 955 candle and all, so this is when straddle premium shot up, when it's almost at some point of time the premium went down to 80 points. From there it shot up almost like a 105, which is almost like a 25% higher compared to the day's low. So from here onwards, so the straddle premium behavior was very weird, until 230, I would say. I think even after 230 also, I think up to 230, 235 there was no decent fall in the straddle premium. So during this, as you could see, there are many times, there are multiple times straddle premium fell down by 20-25 points and then immediately shot up by 20-25 points, right? And then there were times it even shot up by 30-40 points also. And the trickiest part is the moment it goes up, even if you want to try and sell some of the strategies, the premium decays very fast. It raises 20-25 points in the next 5 minutes or 3 minutes, it's losing all that value. So that is how the straddle premium troubled option sellers today. And see, if underlying is dancing in this way, with the huge volatility, entire the day, the Nifty was very volatile, and on top of that, if you see the premium behavior without any decay at all, it is very, very tough for option sellers. And if you are escaped with the small stop loss, I think you really need to pat your back. So that's how the day went. So so from here, as the Nifty started consolidating, so there was a sort of there was a decay in the premium, and then there is this big red candle. So this has given a good dent. So till here, I think I was in a profit of almost like a 0.25 or 0.3%. And I mainly had majority of the positions was puts, because this particular move, when the straddle premium shot up here and it has taken out most of my call positions, I think a majority of the positions were puts. And this particular sudden fall, it was so sudden, so it has hit, it has taken out, I mean, most of the puts, and those puts also, they have suffered the slippages as well. So whenever you get a sudden fall, and that will always lead to the slippages. So some of the entries had a slippages, and during this period, and especially, I mean, I want you to focus on this particular period. So if you see that 1 o'clock to this is from 1 o'clock to 1:30, Nifty was absolutely consolidating. Even if you look at from 120 to 130 also, Nifty was not making any move. It was consolidating in a very small range, right? So but look at the premium behavior. This is let's look at where is 1 o'clock. So this is from 1 o'clock. So if you see this is 1 o'clock. From 1 o'clock, though Nifty was consolidating in a very small range, the straddle premium constantly started going up. It's almost went from 60 rupees to up to 130 or 135. It went almost up to 84. This means this is really, really weird, and we have been observing this particular pattern from the last 3-4 months, and I covered it in some of my videos also. This is what is the big players game, whether you want to call it as a manipulation or big players game. So this is what it is. So we can, if premium shooting up because of this kind of a big underlying move, yes, it explains, and it makes sense that there is a demand for calls. There is sudden demand for the calls, because all your calls get short covering, and also the buy trades will trigger, and as a result of that, I mean, IV will shoot up and the premiums will go up. Okay, they will cool off. That's a different later. So but this is because of this sudden move, so the straddle premium can go up. But here there was no movement in the underlying at all, but straddle premium went up from 60 to 84, which is almost like a 30% rise. That is very weird. That means it's literally, so there was a accumulation. I mean, the people were buying the calls or puts. So I mean, during this time when I was observing, calls were very responsive, in the sense for any small up move, the call prices were going up. I think the game was like the big players were buying the options. But for us, what we need to learn from here is, I think this is something which is I observed many times, and it works almost like 70 to 80% of the times. So whenever we see that underlying is not moving much, but the premiums, the straddle premium is continuously going up, so 90% of the times you can expect one big move either on the upside or downside. So we do not know, I mean, which side it will come. So I mean, if you are a discretionary trader, I think you can close most of your positions, or you can have a very light positions. And if you are a systemic trader, I mean, as a systematic traders, I mean, we need to follow the system. I also need to follow my system. But I think if this pattern continues, probably we need to give a consideration, like at least if there are some positions, and if they are in a profit, or if some OTMs, or if one side SLs got hit and other side you have a less premium, I think it's better to close those kind of a positions rather than risking them, when we know that when we probably know that there is likely to be a bigger move. So I mean, we can always recreate those positions. So I need to really seriously think about that. So I mean, I haven't made my mind, because it's a systematic trading, but I think it's really worth, and it happened many times actually. Whenever you see that premium is not dropping and premium is rising, when underlying is consolidating, there is a very, very high probability of one big move. After that big move, most of the times there is a potentially then the premium starts decaying. Sometimes the premium starts decaying after multiple moves. Okay, that's another case today actually. So here there was a good accumulation. I mean, the options buyer with the big pockets, I think they bought it, right? And then so this particular move, right, so it gave it shot up, in this move. I mean, the calls doubled, even some OTM options and all tripled actually this. And the Nifty was not able to break the day high, and you see this pattern, so the options were bought and the big pockets moved the index up, and then there was a profit booking, and suddenly, and then after that, I mean, the profit booking was, in the options, it was so strong that, I mean, because of that, I mean, then they brought the underlying down. So, and during this time, even if you look at the straddle premium, so that also felt like anything. So just look at, it went up to 97, right? From 97 at 341. Okay, in next 6 to 7 minutes, okay, probably in 10 minutes. From there, it fell down to 66, which is what, I mean, kind of, almost like a 35 points came down. So this is what it is actually. So this makes it very difficult. And what happens is, I mean, if you had a straddles or strangles, so first it will take out calls, and then during this reversal, your puts also will be out. That's what happened to me as well. And even after this risk played out today, the premiums did not start falling, and it was pricing like swing low breakout, right? So this is where you can see that it was really frustrating actually during this day. The straddle premium comes down to 66, and it goes to another 15 points, and then suddenly it comes down, and again it goes up by 10 to 15 points. So what happens is, I mean, so when the premium is not going like this, and also underlying is moving in one direction, so if you have some small stop losses, yes, I mean, you can think that you can get the directional benefit. But what happens is, the moment you see one or a small green candle reversal, so the other side stop losses also gets hit. And if we have a strategies with a bigger stop losses, then when you have a directional move, one side, even though the one side stop loss hits and other side it may not hit, but because of the nature of the very big stop loss, so you may not be able to make any money from that particular position, especially in Nifty. I mean, in afternoons, you are most likely to get the skewed positions, and if the stop losses gets hit on the skewed premium side, then there is no way you can able to close that particular strategy in green. So that's what happened today. Right, so after this one, the premium was not falling, and then only after, I think, so finally when the swing low was broken around, I think 220 and all. So from there, it started falling, but again there was some hiccup. That's because, I mean, the swing low was broken, and then there was some big red candles and all. And so finally, I mean, Nifty broke the day low also yesterday, and I also marked this, this particular line is yesterday's low, so to see and whether Nifty is going to respect the yesterday's low at least. So during this fall, when the day low was broken, and considering the yesterday low is it's not far away, it's only the 30-40 points away, I think the premium, and by this time the expiry will get over in 1 hour. So all this premium has to, I mean, all the premium, when I say all the premium, all the time value of the premium has to become 0. So as a result of that, I think after 2:30 the premium started really melting, right? So if you see that it's from 2:30. So when the yesterday low was not broken, so premium started decaying, right, nicely, and also the underlying also started consolidating. Last 50 minutes, I think Nifty consolidated nicely. But the problem is, I mean, so by after 2:30 you will hardly have few positions. I mean, even if you are entering the strategies also, you may not enter multiple strategies. I mean, I had a couple of strategies, I mean, which entered after 2:30, so they made some money. So they recovered some of the losses, and the positions, I mean, whatever I entered after 1:30, I mean, some of the small stop losses, I think they lost the only put side stop loss, and the call side was okay. So they recovered some of the money and some of the losses. So at the end of the day, so during this time, I think this was the toughest phase, where the loss was decent here, but I mean, with this there was a big spike in the calls, and then because of the sudden reversal, even the puts also got hit. I think this was the peak of the time. My loss went up to 1% at this point. I mean, close to 1%. I would say, I mean, 0.9 or 1%, and then from here onwards, as premium sort of showing slight mercy, the losses started slowly coming down. It's not a like sharp cut in the losses and all. I mean, from 1% it came down to 0.8, 0.7, that's how it was going. and because most of the positions had only the calls, and by the time the Nifty came here, even the calls did not had a much premium, and it was like 6 rupees, 8 rupees, I think 4 rupees, and that sort of a premium, and only the 450 calls had some decent premium, and that that became zero by the end of the day. And this far last 45 minutes consolidation, whatever the few positions I entered, they gave both calls and puts gave some profit. So at the end of the day, I ended up with loss of 0.54%. So this account, I got a loss of 1,19,000, let's say 1.2 lakhs, and this one is 14,000, and my other account, so this gave a loss of 1 lakh. So overall, it's a loss of 2.33 or 2.34 lakhs loss on my account size. I think in terms of percentage, so it's a loss of 0.54%. So considering the toughness of the day, both in terms of premium and also the underlying behavior, so I think this loss is quite acceptable. I think I'm okay with this loss. Ideally, I think the loss would have been probably, I think, 0.3 or 0.35%. But this particular move, and also this particular call side move, so they gave a good slippages also. If the slippage were not too high, probably the loss would have been, I think, 0.35 or 0.4%. But because of the slippages, so I had to pay another 0.15% loss additionally. So I think the key learnings is, so whenever you see this kind of a pattern, like underlying is not moving much, but the straddle premium is going high. So if you're a discretionary trader, you need to really seriously consider to reduce your position size and then enter after the move happens. And for systematic traders also, I think we may probably need to close at least some of the positions where the premiums are where the premiums are very less for some of the positions. So that's the main learning for the day. We cannot stop from this. We cannot, as a retail traders, we cannot do anything about the stopping the big players moving the straddle premium and also the underlying this way. But all we can do is, so we can always try to see how we can able to take an advantage of these kind of IV spikes by shorting the IV. So at some point of time, yes, sometimes when you short the IV, when you short the premium rise, so if the IV continues to rise, you may suffer additional loss also. But if you backtest and see, you will get to know overall you are in advantage or you are in a disadvantage. So I think that's one way. And second thing is probably we can reduce the position size whenever these things happen, so that if there is a big move which may potentially happen, considering the past 3-4 months history and all, so we can at least reduce some of the losses and then re-enter the positions. And one more thing, when these kind of a moves happens, generally the premium decay happens when the directional move is happening. The problem is, when the directional move is happening, you can't get the you will not be able to get the premium from both calls and puts. You can only get it from the calls and puts. So when you see these kind of patterns, actually, if you are a discretionary trader, again, you can play with the small stop losses. Small stop losses, maybe I think something like 25, 30, 35, 40% or that kind of a stop losses. Even if your one side position gets out, but the other side position can make a good amount of money, because you still have a 60 to 70 rupees of premium, which is very good premium, considering you have only 1 to 1.5 hour for the expiry. So yes, it's a tough expiry. And the last SENSEX expiry was ultra cool. Probably the big institutions has left it to the option sellers to make some money, and probably, or they were in a holiday. And today it's a tough one, both from underlying and also the premium behavior point of view. And so this sort of a premium behavior, whether we call it as a manipulation or the other things and all, but the way I see it is, so earlier option sellers or as a big fish. So we used to eat the small fishes, like option buyers. I'm not saying all the options buyers. I mean, there are very few people who make the money in the option buyers also. But in generally speaking, option writers or option sellers eat the premium from option buyers. And now what's happening is the whales, like big institutions, big firms and big prop desks, okay, they started eating the big fishes like a option sellers, right? But we if we follow our risk management and discipline, and if we continue to improve and continue to build the strategies to counterattack these moves or to save from these moves, I think we can still continue to be in the game and try and see what alpha we can generate eventually. I think the risk management has to be very important, and discipline has to be very important. And on these days, if we see that the losses are increasing, and if we get into the mode of revenge trading and start taking more positions, for example, today, no matter wherever you have initiated the positions, until 2:30, you would have 2 or 2:30, you would have probably ended in loss. And if you're a systematic trader and if you have initiated additional trades, the probability of making the higher losses, I think you would have probably made more higher loss, rather than making a profit. So that the disciplined approach and the risk management, I think are going to be a very key. And if people are thinking about or using the very high leverage and all, I think it's time to not to go for a very high leverages. So in general, the leverage is really good when the things are going in your way. When I say things are going in your way, if the whole market is giving you the additional edge, right? If your trading system or if your set of strategies has a clear edge, and if the ecosystem of option selling or option trading is also giving you an edge, so that is the time you can take an advantage by going for an additional leverage, right? But if the things are tough and if you are going for additional leverage, so that is going to make your risk management poor, and eventually that may not help you, right? So I have seen some of the people also struggling with higher leverage also. So it's time to be a bit cautious. And it's not out, so there must be a way to make the money. So as I said earlier, so we need to work hard to protect from these kind of premium behaviors, and how to need to think about counter as well, right? I think so I think this particular video is a bit lengthy, but it's worth it because there is a lot of points to discuss. And in fact, we learn something only when we face a tough days like this, or when we make when we get into the losing days, right? Otherwise, if the market is so cool and if you are making money, so if the market is so cool and if the premium decay is very linear, anybody can make the money. So that's not the greatest part, but how we can reduce our losses during these days, so that I think that's even more important in my view, right? Okay, so I think that's all I wanted to cover. So I'll see you in my next episode, that is on next week Tuesday with SENSEX Expiry. And if you like this content, if you feel that you are finding the value with all the information whatever I am sharing, so just consider giving a like this video. And also if you can you can share it with your friends. So by doing this, it will only reach to the more people, and probably they can also get benefited from that, right? So I'll see you on SENSEX Expiry next week, and till then, take care. Bye.